Thanks, Suzanne. I think that I may sound a bit contrarian to what Mark just said, but it's clear that in the aftermath of Kenya and Mali, the Africa premium went up. In other words, the perception of G8 countries about Africa is really going down. And that perception relates directly to high corruption, political instability, and low governance. And that perception basically drives the flows or not flows or discounted flows to Africa. And I'd like to talk about that, Suzanne. I'd like to refer to the fact that the only way to fight corruption and improve governance is really about using and promoting greater competition to break down the lock of family compact, collusion, and make sure that there is diversity. The other condition is about transparency. There was a reference earlier today concerning research. We need to have more information about those markets. And the issue today, if that perception of Africa is about a continent lumping all the countries together as if they were not different, is a very negative aspect and factor for Africa as such. Therefore, diversity, showing greater transparency is important. And that's what we want to talk about. Competition here is essential to retain a greater share of capital. It's better to have, and regardless of the size of the market, it's better to have more operators, small to middle-sized operators, than to have 2 or 3 or a handful of middle-sized and mega funds. In other words, spread the capital, spread the delegation of management so that we have a liquid market, which is probably a major weakness of Africa today, to attract investment from abroad, as well as to retain domestic investments that, we have to remember that a lot of domestic funds are moving out of the country or the continent. The other aspect is about transparency. Transparency is essential here to improve accountability and to put greater pressure on those operators. If you're trying to diversify, well, make the system more transparent. And generally, the more diversity there is in a market, the more players there are, even though they may be smaller, the governance and transparency will tend to be higher than if you had a concentration of institutions with a lack of liquidity. This is about, and that's why those two factors lead us to the proposition that AI is putting on the table here, is how can Africa wash whiter and demonstrate a greater sense of relevance to the international capital market, and as Mark was saying, to raise the attractiveness of the continent. Well, you have to, we believe that by introducing a fiduciary rating of asset managers, i.e. what Mark was referring to, a sort of standardized due diligence of all asset managers that would become public, is an important solution. If we could also rate on the same basis brokers and eventually custodians, we would have a sense of transparency that would show and explain to outside investors as well as to domestic investors how the market operates. And that's what we propose. What is fiduciary rating about? It measures the probability of failing the investor's trust. And by doing so, we measure and evaluate practices instead of past performance. We all know that past performance cannot guarantee future returns. But strangely enough, habits and practices tell a lot about what could happen in the coming months, years, or whatever period you have in mind. So that's what we propose, Suzanne, by improving and by setting a mandatory program of fiduciary rating, I think Africa would distinguish itself vis-à-vis Asia, Latin America, and Eastern Europe.
Doing business in Africa, you can't afford to be without Africa Investor.